Hello, as we take a look at Sembcorp Industries' annual report for 2015, we can see a couple of key themes established. The first is that the utilities business gets a lot of positive press. It's in the limelight in this document. But as we'll see in a few moments, there are some black spots as well, which we'll talk about. The marine business, which has been much maligned because of the fall in oil prices and the obvious flow-on effect that that's having on orders, for example, for rigs, actually has some silver linings. And so overall, one of the key themes that I got from reading the annual report is that a diversified conglomerate like Sembcorp Industries does purposely have various business units so that when one is down, the other one is up. But even within those business units, there are pros and cons. So as we take this brief look through the annual report, you'll see this theme emerge again and again. Utilities is being held up as being very good, but there are some drawbacks. Marine is being acknowledged as being very bad, but there are some positives. And then we've got the urban development and other corporate news to throw in as well. So let's get a handle on some of these key themes. Here are the main headlines. Firstly, $610 million worth of impairments, a large chunk of that because of their customer in Brazil, Seat Brazil. We already saw Keppel Corp take charges because Seat Brazil hasn't been paying their bills. They've got financial problems, and that's a large chunk, although not all of those $610 million impairments. They also had some positive news from the sale of their Australian solid waste management business, as well as water ventures in the UK and China. That $400 million was really important to help support their profit number this year, and the cash will be used for reinvestment. And where? We'll find that out in a few moments. Also important for shareholders is the decline in dividend compared to last year. But once again, we can't just take that at face value because there is actually also a silver lining to that number. Singapore contributed 1/3 of net profit, and you can see there too the outlook. The global slowdown, low oil prices all weighing, and intense competition. That phrase actually came up again and again in the annual report, and you'll hear me say that again in just a few moments. Let's drill down into the utilities business, which was started in 1995 with an investment in Jurong Island in Singapore. Here we are now, and the utilities business makes up the bulk of the profit and an increasingly important part of the revenue. According to page 31 of the annual report, we'll see that contribution continue to grow. The utilities business invests in water and energy projects, and an increasing number of those investments will be in the renewables business, already making up 15% of the portfolio. But that's not to say that they're not going to invest in the so-called thermal capacity, gas and coal-fired power stations, for example. Again, more details of those coming up, including in Myanmar and Bangladesh. The marine business, remember what I was saying, marine has been much maligned because of the low oil prices and the resulting lack of demand for oil-related infrastructure. But again, there are some silver linings. The net loss certainly wasn't a bright spot. But if you count out all of those impairments that they took, actually the marine business would have made a profit. $384 million to be precise. You'll read about that on page 38. So again, silver lining. The order book still more than $10 billion, down from last year, but they secured more than $3 billion during 2015. At a time when you would expect, all the orders to have dried up. They actually still got orders, including two orders worth more than $1 billion. So not all is doom and gloom at the marine business. Let's put all of this into context with a quick look back before we look forward for all of these businesses. Page 58 in your copy of the annual report, that's where you'll see all of these charts. Almost all of them were down. Turnover down by 12% to their lowest level since 2011. Utilities the largest contributor. Now that it's in so many countries, 70 facilities in 15 countries, it's grown a lot. Profit from operations, wow, that was half of last year's, with much of the damage coming in the fourth quarter, as you'll read on page 55. And the question for the annual general meeting might well be whether the weakness in the fourth quarter has extended into the first quarter of the current financial year. Back to page 58 and you'll see this net profit chart. Once again, a very sizable decline, as you can see there, 32% decline to be precise. What's interesting is, once again, that $610 million impairment and provisions is largely responsible for the big decline in the net profit number. But what I also found interesting on page 318 is that Sembcorp Industries has given quite a lot of banking guarantees to associates and joint ventures. In fact, more than $1 billion worth of guarantees. And 577 million of those guarantees are due within 1 year. By due, I mean that the guarantees for bank loans that Sembcorp Industries gave its joint ventures and associates, about $577 million of those guarantees might be called in if those joint ventures and associates have problems. So now that they're taking impairment charges, what is the risk? That's the question for the AGM, I suppose. What is the risk that Sembcorp Industries will have to stump up some cash to help its joint ventures and associates out of a bind? The ROE, return on equity, was down. I also have this chart on return on total assets. That was down as well. You won't find this chart in the annual report, but the numbers are on page 54 if you'd like to look at them. And over to the dividend. I did promise you a silver lining to that decline in dividend. Yes, 11 cents per share is weaker than previous years, but in actual fact, it's a higher payout as a proportion of profit. So the dividend, yes, is down 11 cents versus 16, but as a percentage of profit, it's actually up from 36.1% last year to 37.7% this year. So you're getting a greater share of the profit paid out as dividend, even though the number of cents that you get per share is less. Page 60 to 61, and here we can track very closely how the performance of the utilities business feeds into the group performance. Let's firstly take a look at the revenue. And what's curious is that that orange bar, which shows the utilities revenue, is actually less than last year. So utilities, again, held up as such an important part of the business now, established 20 years ago, revenue was actually down because of lower high sulfur fuel oil prices and lower gas offtake. Also, at the same time, they had a higher contribution from India, but still, revenue was slightly weaker. And you can also see that the blue bar, the marine part of the business, is still a very substantial revenue contributor, even though that was also a touch weaker, largely because of the rig building projects. There was less revenue recognition, lower average revenue per repair vessel. Had more vessels coming in for repair, but they earned less from them. There was also the business reversal of revenue due to termination of a contract with a customer, customer deferment requests, customers restructuring, which resulted in lower revenue recognition, and so on and so forth. But the positive news, the offshore platform segment recorded higher turnover. Overall, key feature here of this trend that we're looking for is that utilities and marine both suffered some declines in revenue. Okay, hang on to that thought. As we go to the profit from operations chart, as I mentioned, down 50%, continued intense competition in the local power market, but you see that orange bar has lengthened quite considerably. So in other words, it's a very important part of the profitability story, even though the uniform Singapore energy price averaged about $40 less than in 2014, down to $96 from $137, a very big decline on a per megawatt basis. Also in India, much vaunted because they've just bought these assets in India, solar and wind assets, they actually posted a loss on operations because of a cyclone contributing to lower than expected plant load, coal losses, lower demand in the fourth quarter. So the upshot is utilities, not all bright sunshine. There's some issues there as well. But on a net basis, it was really all utilities. So even though revenue was not as big as marine, as far as net profit was concerned, it was a very important chunk. Even though net profit was down 32% for the year, with the fourth quarter particularly, just $61 million contribution, very, very low. But the utilities business really came to the fore. But again, a lot of detail to take in here. So utilities revenue, rather profit, was boosted by the divestment of those assets in Australia, China and the UK that I mentioned, solid waste business in Australia, municipal water operations in the UK at Bournemouth and Zhumaidian in China. They also made impairments for their steam assets as well as other assets relating to specific customers. They also made an allowance for doubtful debts in China, page 72, in case you want to read up on that. The marine business No cancellation of rig orders, as you'll see on page 82. And the profitability numbers, you can see that that blue bar is actually in the negative for all of the reasons that I mentioned before. The lower contribution from rig building, write-downs in inventories and work in progress, customer deferment requests and restructuring, higher finance costs, impairment loss on available for sale financial assets, and the list goes on and on. What you might not see so clearly on this bar chart from where you're sitting is the urban developments business. Profitability there lower, and corporate included a fair value loss of $34.5 million on their 12% stake in Gallant Venture, so also not contributing to this chart at all. Net debt was up by more than $2 billion. Now, the reason for that is in part because Sembcorp Marine took on more debt. You heard about those higher finance charges just now. But also they took on debt from Green Infra Limited, which they raised their stake in. It's now called Sembcorp Green Infra. And they also took on more debt to buy their India business. So all up, debt to capitalization 0.46 times, up from 0.4 times, and interest cover has plummeted from more than 20% to just over, more than 20 times to just over 7 times. Group's cash and equivalents 1.6 billion, debt at 5 billion, but they have many more untapped lines of credit that they can draw on if and when they need to. Debt up 70%, again, might be a question for the AGM. Let's turn to page 298, and I always find it very interesting to see whether customers are paying their bills. Now, according to this table on page 298, there are quite a number of them who aren't. And I already referred to this because of those deferments and the impairments and so on, but this really spells out the numbers. What's interesting about this table is that they have more than 4.4 billion, in fact, in invoices that they've written and haven't yet been paid, but that are not yet overdue, 4.4 billion. But as you look further down this table, you'll see that they have more than 200 million due or overdue by up to 3 months, 42 million overdue between 3 and 6 months, and, well, you could say 240 million overdue by more than 6 months. Right? So there's a lot of money that customers should have paid them at least 6 months ago, but haven't. And so Sembcorp Industries has now impaired them, and you'll see that in the right column of numbers here. And you can see too that they've impaired 2/3 of their invoices that are due between, or overdue between 6 and 12 months, where they're saying, hey, you know, the chances of us getting this, we're not so optimistic anymore. And when you look at what's been overdue for more than a year, they've impaired almost all of that $100 million figure. So again, a question for the AGM, what are they doing to try to bring that money in so that they don't need to take further impairments against their overdue invoices, or invoices that are overdue from their customers? Over to the Chairman and CEO statement, and you can find that on page 8 and 9 with this photograph of Chairman Ang Kong Hwa as well as the Chief Executive Tan Kin Fei. Curiously, they spend quite a lot of time again talking about the utilities business, and here are some of the key points. They'll continue to expand their renewable energy business, which they say represents a new engine of their growth, currently, as I said earlier, making up 15% of their portfolio. But they go on to say that while the emphasis on renewables has increased, we believe that thermal energy, that is coal and gas, continues to be relevant, their words. At the same time, they're looking at cleaner, higher efficiency coal technologies, which will be important both for generation and lower emissions. And that's going to be important when we look at the sustainability report in a few moments. So again, yes, more renewables, but at the same time, more of the traditional, conventional ways of generating electricity. Turn to page 74 and 75, and you'll see that they have made good progress on building a second 1,320 megawatt coal-fired power station alongside the one that they already have in Andhra Pradesh. That's targeted for completion this year. Ask about that at the AGM, how that's progressing. They are also building one in Chongqing at the mine mouth, the mouth of the mine. That should be ready by 2017. Ask about that. How's it going? In Myanmar, the International Finance Corp, part of the World Bank, has financed a 225 megawatt power plant, which Sembcorp Industries is building, and in Bangladesh, 426 megawatt plant. Both of those should be ready by 2018. They're both gas-fired power stations. more subjects of conversation at the AGM. In total, they say they will be adding more than 3,800 megawatts of power and more than 1.3 million cubic meters per day of water and wastewater treatment capacity between now and 2018. And all of this puts them on track to bring their capacity for gross power and water capacity to 10,600 megawatts and more than 9 million cubic meters per day. And that puts them on track to achieving their so-called 10/10 vision, or 10/10 vision, which they set 5 years ago to reach 10,000 megawatts. Okay, check, they're there. And 10 million cubic meters per day, almost there. The question you might like to ask at the AGM is, now that they've achieved those goals, what goals are they setting themselves next? The operating environment for their utilities business in Singapore is expected to be challenging in 2016, they say, and that would be pretty much the same as what we've already experienced in 2015. Now, I did promise you a look at the urban development part of the business as well, and for that we turn to page 90 and 91. It's a relatively small part of the business, but an interesting one because of the work that they're doing in land developments for industrial, mostly industrial, but also commercial and residential or mixed use. And what you'll see on page 90 and 91 is that they have an order book for 220 hectares worth of land, up from just shy of 200 hectares last year, page 89 if you'd like to follow this in your book. And that 220 hectare order book should be converted in the next 2 years. Question for the AGM. Okay, we know what the order book is according to hectares, but what's the likely revenue that they're going to make from this? They also keep saying that they are receiving inquiries for their land. Question for the AGM might be of how it's going, converting those inquiries into actual sales. They also make a comment about the weakening Vietnamese dong. The currency has been devalued 3 times by the State Bank of Vietnam, they say, and the currency's trading band has also been widened. These should serve to increase export competitiveness and safeguard GDP growth, they say. A question for the AGM might be what sort of currency impact, negative currency impact, that will have when they translate those sales in dong back into Singapore dollars. A couple of other quick points to take a look at as we move through the rest of the annual report. Firstly, the urban development business is expected to deliver a steady operating performance in 2016. So again, it's a small part of the business, but hey, at least it's steady, which of course, looking at marine and utilities, we've already heard are being challenged at the moment by the operating environment. Quick look at directors and chairman's fee. You'll be able to read that up on page 108 to 110. They also make mention of a report by Mercer. They paid Mercer to study the relationship between pay and returns, and Mercer has reported to them that there is a strong correlation between the group's executive pay and its business results and shareholder returns. Over to page 150 for the sustainability report briefly, and what you'll see here is these 3 bars on this bar chart. That shows the increase in greenhouse gas emissions, partly because of their cogen plant in Singapore, their new plant in Fujairah in the United Arab Emirates, and that's why burning coal efficiently and cleanly is so important for them, as we saw earlier on when we talked about the utilities business in China and India, among other places. And you know, if they don't employ this clean coal technology, then this bar chart is going to continue to rise. So that's why it's so important for them to employ this technology. They also commented that they're participating in the Ministry of Education's Mentors Network program. And curiously, they also said that they had 3 fatalities in 2015. Now, that's mentioned twice in the sustainability report, whereas the chairman's statement actually says they had 4 fatalities. Perhaps it's something that you'd like to ask about when you go to the annual general meeting. It's on Tuesday, the 19th of April, starting at 11 o'clock at the NTUC Centre.